Hi everybody, it's Terry Ryder from Hotspotting, bringing you my regular weekly feature, at this time Hotspot of the Week. And this week I want to focus on Regional Queensland. Just been doing our regular quarterly research where we look at sales volumes for every town and suburb across Australia. That's for ultimately the Price Predictor Index, which we publish every quarter based on sales activity in all the locations across Australia, because sales activity, whether it's rising or falling, tells us what's happening to demand in those locations, and that has an influence on what happens with prices. Regional Queensland has stood out in this latest research. One of the factors that stands out is the number of major regional cities in Queensland that have solid markets or rising markets, but in particular what stands out is the recovery in regional centres that are strongly linked to the resources sector. Major recovery underway, and many of those locations that have previously been for the last few years in downturn, both in terms of their sales activity and in some cases quite significant uplift in prices, although from a very low base. I'll get to that in a moment. Undoubtedly the number one market in regional Queensland at the moment, or anywhere in Queensland for that matter, including Brisbane, is the Sunshine Coast. The Sunshine Coast has what I call an evolution economy, major spending on infrastructure, over $20 billion being invested in new infrastructure and other developments, leading to a much stronger and more diversified economy. And the Sunshine Coast has brought new people to the area because of the jobs that are being created in areas such as the new medical precinct. And that's had a significant impact on prices. In a broadcast last night, I mentioned the price growth that we've seen in the Noosa part of the Sunshine Coast, up in the northern tip of the Sunshine Coast. And I mentioned that the median house price for Noosa Heads is up 19% in the last 12 months. And the median price for apartments in Noosa Heads is up 26%. And also significant price growth of that magnitude or more in Sunshine Beach, Sunrise Beach and Noosaville. There are other parts of the Sunshine Coast also having very strong growth. The suburb of Doonan, its median price has grown 27% in the last 12 months and still rising. Mount Coolum's up 22% and Twin Waters is up 23%. There's strong growth right across the board in the Sunshine Coast market, and it's undoubtedly the number one market, still rising. Although the sales activity patterns do suggest that the Sunshine Coast may have passed its peak in terms of activity, because there's a lag in which prices react to what's happening with demand, sales activity. We're still expecting to see significant price growth this year on the Sunshine Coast, but perhaps the rate of growth is going to start to wind down as we go through 2019. The Gold Coast hasn't had the post-Commonwealth Games boost that some have predicted. I didn't expect it to. I thought the boost was actually most likely to happen before the Games and the construction phase that for the infrastructure leading up to the Games, and that's what's happened since the Games. There's been a wind down in the Gold Coast market. It's still pretty solid. There's still some growth markets there, but most of the markets there are what we call plateau markets, where sales activity has plateaued out, tapered off at levels below the peak. We're still seeing suburbs on the Gold Coast with pretty good price growth, but that mini boom that the Gold Coast had leading up to the Commonwealth Games has certainly passed. Other areas around regional Queensland that are doing pretty well, the Fraser Coast is showing signs of rising. There's a number of suburbs there with demand rising, and also some having pretty good price growth as well. Cairns is doing a little bit better. Toowoomba, which has been a growth market in the past, has been through a bit of a lull period, but now seems to be on the way back, on the back of major investment happening there in infrastructure and other things. And at last we're starting to see signs that the very promising Townsville market is starting to show some uptick. It's something we've predicted. We're still waiting for signs of it really to come through in the real estate data, but there's a total of over $25 billion worth of investment going into that Townsville economy, some of it already underway, others in planning, approved, ready to go. We're now starting to see some of that happening, and as it starts to work its way through the Townsville economy, we're going to see some uplift in the property market, which for the last 3 to 4 years has been through a downturn. But one of the significant things about regional Queensland that we're noticing increasingly, and particularly in this latest survey of sales activity, is the uplift in mining-related regional towns and smaller cities, led by Mackay. Mackay's been the first of those places to get on the recovery path. Vacancies much lower than they were before. Sales activity has picked up, and some of the suburbs of Mackay have shown pretty solid price growth in the last 12 months, sort of 7, 8, 9%. The town of Emerald in the Central Highlands area, one where prices dropped a lot when the resources investment boom went off the boil, but it's certainly on the way back. We've seen a steady uplift quarter by quarter in sales activity in Emerald over the last 12 to 18 months. And in the last 12 months, Emerald's median house price has risen 22% to reach $300,000. So still below the peak price levels that it had a number of years ago, but 22% growth in the last 12 months. Now, the iconic coal mining town of Moranbah is another one of those places where we've seen some uplift. It's got a long way to go to get back to those crazy boom peaks that it experienced. For a period of time, Moranbah was the number one growth market in Australia in terms of price growth. It just went to crazy levels over a period of between 5 and 10 years. And the median house price topped 700,000 and then fell down below 200,000 when the bottom fell out of that market. Well, it's on the way back. The median house price for Moranbah has risen 21% in the last 12 months, but it's still only up to 200,000. A long way to go to get up to those former peak levels, if it ever does. Also in the Bowen Basin area, the town of Clermont has risen 20%. Its median house price is now up to 220,000. And I would emphasise that these increases are coming from a very low base because all these markets dropped a lot. And the small town of Collinsville, which has been impacted both positively and negatively by its links to the resources sector. Its median price has risen 17% in the last 12 months, but the median price remains below 100,000. So you can get an idea from those numbers how much prices fell in places like Collinsville when the resources investment boom went bust. So certainly not suggesting that people rush out and buy in these places, but just noting for the record that there is substantial recovery at last underway in some of these resources related areas. Now the big one is of course Gladstone, where we had in 2010, 11, 12 a major boom, big rises in rentals and prices because there were 3 massive gas projects totaling about $60 billion happening in Gladstone. But 2 things happened. Developers overreacted and grossly oversupplied that market. At the same time, it transpired that most of the workers on those big projects weren't renting or buying local accommodation. They were staying in specialist workers, temporary workers camps that were set up by the proponents of those gas projects. So Gladstone market, while there was a major economic boom happening in Gladstone, the property market dived. And in many, most of the evidence suggests it's still on the way down. Certainly vacancies have improved a lot. They're down to around about 3%, where at one stage they were 10 or 12%. And we're starting to see the first signs of recovery in Gladstone. 2 of its suburbs, the suburbs of New Auckland and Clinton, demand is certainly rising. The sales activity numbers for those 2 suburbs have been increasing in the last 12 months. And in fact, New Auckland's median house price has risen 9% in the last 12 months. But I have to say that most suburbs in Gladstone still have falling median prices, and there's still no sign of uplift in sales activity in many of those suburbs. But nevertheless, with New Auckland and Clinton and the vacancy rates, we're seeing the first signs perhaps of recovery in Gladstone at long last, because it's been 5 years of decline caused by massive oversupply. So 2 major factors to keep in mind for regional Queensland. Certainly some very strong markets, rising markets like like Sunshine Coast, and signs of growth returning to places like Townsville and Toowoomba. And then the other main factor is the recovery that we're seeing in some of those resources-related regional towns and small cities, led by Mackay. Be very careful if you're considering buying these places. There is some major medium price growth. As I mentioned, Emerald up 22%, Moranbah 21%, etc. But these are very volatile places, high risk. Keep that in mind. If you're tempted, I certainly wouldn't be personally. So that's it. Lots of possibilities to consider, lots of action happening in those regional Queensland markets. Certainly, I'm expecting this year to be much stronger and more positive for more locations in regional Queensland than we've seen at any time in, say, the past 5 years. It's definitely going to be one of the places where investors will find growth in 2019 and beyond. That's it for now. That's Hotspot of the Week for Tuesday, the 22nd of January. It's Terry Ryder signing off. We'll do it again same time next week. Thanks. Bye for now.